I'm going to hold up a little, because I still don't know how to do captions yet on YouTube because they took it off. So I'll say we do it this way. Right, there you go. And that's the Best of Investing radio show. All right.
What are our times today, Mr.
Okay,
Dane?
times are 7:10, 9:40, 8:40, 8:48, and 5:10. And I'm going to put it myself here. Okay, and Dane was here, was it yesterday?
Yeah.
Yeah, so we kind of went over like
good.
housekeeping type stuff. Okay.
I got a couple of articles. Bay Area real estate a bargain, in some places maybe.
Ah, okay.
And then opinion, the best single investment for the next decade.
All right.
This is from Market Watch. This is from the San Jose Mercury News.
And you have Dane's
Dane's questions. And then, are you? I was talking to a prospective investor today, and her daughter her son-in-law is a veteran. Got an incredible loan through VA.
Yeah.
And not so much rate. I mean, overall it was rate, but it was just really, really efficient and fast. And I don't know if VA loans have changed over the process, but
well, the VA is an insurer of loans. They don't actually issue loans. Lenders like us issue the loans, and then the VA gives us insurance for that loan. For a bank who doesn't know how to do them, they're very complicated because there's different forms. There's certificates of eligibility, which you need to receive from the VA.
Maybe that's something we can talk about on the air.
Yeah. But,
and so again, remember when you talk to him, how are you going to talk to him?
I'm going to talk to him. My eyes
That's right, exactly. Or you can pivot this way, and that's the only reason why we actually have the headphones.
Smart.
Yeah.
Because I got to get used to that.
Exactly. See, I give you an example. Go ahead and put the headphones on. You'll see. Okay, so you see here I can talk really well, but look what happens when I talk over here.
Oh yeah.
See, but I don't know unless I have the headphones on. That's why we do the headphones. And the only is the FCC says no swearing, no potty mouths around here. All right. Okay, so we don't want it to be an infomercial, but yet we'll definitely let you
sure,
to give websites and all that kind of fun stuff, because you had some good stuff here about why would someone use you rather than a big bank.
Sure.
Okay.
My other question too, or I don't have to ask it, is companies like Unison, and I won't mention Unison, but I'll say there's companies out there who will co-own a home with the borrower, providing part of the down payment. Can you tell us about that? And so if it's something that you want to chat about, then I'll ask.
Yeah, I mean, it's not something we do, and I wouldn't consider myself an absolute expert in it. I do think for the right homeowner, it could have some real big advantages, but it also has some risks that people should know about. So,
and you can talk generally, you don't have to be an expert, but talk generally about that.
Yeah.
All right. And on the email we have for you is, why is there a minimum hold time in your fund?
Okay. Got it.
All right. And you guys are ready?
Yes.
Right into it. All right. So we always give the about 5 seconds of silence before and after, because they have to kind of merge it together. All right. And away we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for our 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is science.
Science.
She blinded me with science. Remember that?
Who's saying that?
Oh gosh darn it! It was from that movie, like Weird Science or one of those.
I don't know.
Dolby.
Oh yeah, Thomas Dolby.
Thomas
That's
Dolby.
right.
Yeah.
That's
right. Okay. And our special guest is Dane Moeller, mortgage broker from Primary Residential.
Primary Residential Mortgage. I'm doing great.
That's it. Good.
Good to be here.
Good. Dane, where's Primary Residential Mortgage located?
We're here in San Rafael, California, downtown. We also have an office in San Francisco, and the company has about 240 offices around the country.
Wow. Okay. Excellent.
Good. All right. Well, we have some questions we want to ask you, because
right.
you're the mortgage expert. So why would someone use your company rather than like one of the bigger banks? that we all know and love?
That's a great question. I mean, obviously everybody's got a checking account somewhere, and
Yeah.
they walk in the door and there's an advertisement for mortgage. So why not just go to the teller and take out $1 million? The real answer is that a big company like that, generally you're going to be a number in their system. They're going to put you in a big processing center somewhere in the country if you're lucky, maybe out of the country. And if you have an issue, you don't have someone who's there to solve it for you.
How often do you find that people do have issues?
Well, oftentimes people come in and they have perfect credit, perfect income, everything's great, but then the property has an issue. Maybe there's something on title. Does Wells Fargo know what to do with a PACE lien in California? I don't know.
So that's with like the solar.
Exactly.
Right? Yeah.
Yeah. So there's lots of things that can happen even outside someone's individual qualifications that you need an expert holding your hand. And if this is the largest investment in your life, which it is for most people who are buying a home, it's not your checking account and withdrawing $20 or depositing your paycheck.
And do you have a lot of first-time home buyers?
We do, and that's actually another thing that we really specialize in. The educational piece is something I really enjoy. Teaching people about the process as much as they want to know. I can talk mortgages all day long. So, if people want to spend 12 hours talking about a loan, I probably could do that. But I could also just let people know what they want to know, give them the options of different down payment percentages, different programs, pros and cons of each, and really try to come up with a tailored solution so that they're putting down the right amount, not just the most they can afford. And they're picking the right program. Maybe that is a 30-year fix, but maybe it's not. Maybe based on their time horizon, it's an ARM or a shorter term or something like that. And going into stuff like FHA or VA and other programs that they may not quite understand as a first-time home buyer, that we can guide them as to if that's the right thing for them.
Plus, maybe your crystal ball is better than the regular banks.
Yeah,
Maybe.
well, I mean, I'd like to think so. I'm kind of like the weatherman. I can predict rates probably about 2/3 of the time.
Well, with the mortgage brokers, they're usually somebody local who knows the area and the marketplace, right? So there's a lot of value in understanding the local market.
That is big, and a lot of times realtors on the listing side will look at a pre-approval letter, and if it's from Quicken in Detroit, they're like, yeah, how pre-approved are you really?
Oh, that's interesting.
Where, I know most of the realtors in the area here, and, they see my name and primary residential on there, and they say, all right, if primary is saying this is going to work, it's going to work.
And are you guys mortgage bankers or mortgage brokers?
So we're mortgage bankers.
Okay.
We do have the ability to broker, and we do broker probably 2-3% of our loans here locally out of our offices, but mainly everything we do is bank, meaning that we're the ones lending the money. And the advantage there is that you have the same process every time. So same processors, same underwriters, same funders. We put it on the conveyor belt and it kind of comes out the other side. Where a broker is going to be looking around at lots of different banks, and then they're going to go use that bank's process, and they may have to figure that out for the first time or the second time. And if they have a rush situation, they're calling another company to say, hey, can you prioritize this file? Where if I have a rush situation, I'm emailing my underwriter and saying, hey, this needs to be the next loan for you to work on. They have contingencies up tomorrow.
What's the fastest that you can fund a loan?
12 days.
Wow.
Yeah.
I mean, that's
fast.
There are some legally required timeframes.
3-day rescission.
There's only rescission on a refinance, but there's after the initial application, there's a wait period. There's also a closing disclosure wait period. So there's some legal challenges to going faster than that, but we can go in about 12 days.
All I remember is 12 days.
Yeah, exactly. Yeah.
Same on our end with private money. We closed the loan in 5 days or 3 days, and that's all they remember. Hey, I thought you guys did everything in 3 days. No,
I don't want to do loans in 12 days. It's just the fastest we can do.
Right, absolutely.
Well, it's funny because Pacific Private Money, you guys can work fast, and usually it's a big advantage compared to a regular bank that takes maybe 45 or 60 days to do a loan. And now you guys are starting to get into a little bit kind of close to the same space.
Well, in our world, we're plan B for mortgage bankers, mortgage brokers, conventional lenders. And so by its very nature, people come to us at the 11th hour, and typically we're under some closing deadline. So we have to be able to respond quickly.
Yeah, and we're happy to pay off private lenders like yourself after the fact. So we can say, if you need to close that quickly, call somebody who can do it, and then come back around, and we'll take our time, and we'll get you something for the long term.
Yeah, exactly. We're essentially really babysitting that borrower for a short period of time. And really the exit, though, is refinance, and hopefully it's in less than a year, like most of the loans we do. So.
All right, guys, it goes fast. We're going to cut to our first commercial break here. Let's see, we are talking science. And Dane, I forgot to mention that if you know the answer, don't say anything until we come back from break. We want to give the audience a chance. Here is our first science question. What is the common term for nitrous oxide? What is the common term for that? Call 888-912-1190. Be the first to call, and you're going to get that tanning certificate, which is worth $100. What is the common term for nitrous oxide? I want to make a quick mention here. It's hornblower season time. And if you're listening to this commercial, you got just a couple of weeks before Labor Day. Why not enjoy it on the bay? Hornblower yachts. We've been there on it a few times before. Fantastic time. Have you ever been on the hornblower?
It's a great time.
See, he's another happy customer. All right, stay with us. You're listening to The Best of Investing. We're going to be right back. All right. Good first segment. Goes fast. I told you.
Yeah, it does go fast.
All right. Save the
Nitrous
file
oxide.
here.
Nitrous oxide. NOS.
Nos. That's stuff you use to just blow the doors off of the car you're racing.
I think so.
Is that Tokyo Fast and Furious? Is that how they use?
Hit the nitrous. Hit the nitrous boosters.
You know what? I think you're right.
On any race movie, they're going to
Yeah.
pretty much have the nitrous boosters. Or any video game that your kid's playing with.
Yeah,
Oh,
that's
that's
true.
right. Yeah, booster.
Your kids or yourself.
That's how I
you know.
think about it as a kid race cars. Yeah, it's hard not to go like this when I'm talking to you.
I know.
Yeah.
I know. It's
too
funny.
hot
I used to
run
have.
today.
I used to have a mirror up here, but it kept falling down. Because I used to just tell people, just look in the mirror when you're talking to him. But even then, people, they couldn't look like this and talk to this guy. They had to go like this.
Kept falling down. Why did it keep falling down?
It was too heavy for the,
Uh-oh.
I couldn't mark up the walls too much, and it didn't work out. People didn't like looking at themselves either. I'm on the radio. I'm looking at myself. I'm talking to, it was too
Radio
confusing.
face.
Yeah, it was a lot better just talk to me,
Yeah.
even though you're talking to him, a lot easier. Okay. The second segment here, you want to continue on because a couple of questions?
Yeah, I'll mention the VA thing.
Yeah,
Sure, cool.
Okay,
Yeah,
we'll
so
move
you
on
mentioned it earlier.
Okay. You guys ready?
Yep.
Here we go. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money and our special guest, Dane Muller. First trivia question was, what is the common term for nitrous oxide?
Laughing gas?
Yeah, that is correct. Very good.
Yeah.
How many
All
times
right.
have you done that?
I can't. You know what? I don't think I've ever had.
I've never had it
nitrous oxide
myself.
for any dental procedure. Or,
No, just for fun.
oh no!
No, I'm just kidding. I'm
never,
just
yeah.
kidding. All right. No, off the air, you were asking about VA, so go ahead.
Yeah,
and
Dane, you were
do it on
mentioning
the air.
earlier that some of the different types of loans that you do or that people can get are VA loans. And, I was just talking to a couple of prospective investors earlier this week, and they said that their son-in-law got a VA loan. And compared to when these investors first looked at VA loans, it seemed like the process was so much faster and more efficient. And we talked about whether or not that's something to do with the VA itself, the Veterans Administration and their process, or is it the actual bank that's loaning the money? You delineate that?
So the VA is the insurer of loans. They provide us, the lender, documentation during the loan to make sure that we meet their requirements. And then we're going to go ahead and do the loan within our own process. And after the fact, get insurance from them. So it really comes down to the bank knowing how to process the VA's paperwork.
Got it.
Because we don't need the VA to issue a loan. And VA loans are great. They'll offer up to 100% financing for veterans and doesn't need to be active. You could be reserve. They will allow higher debt to incomes than other loans. So somebody who may not qualify for a home under an FHA or conventional loan can get a VA loan.
It's almost worth joining the Army just for that.
Yeah, it might be. Now, one thing to keep in mind with VA loans is that traditionally they've allowed up to 100% of the home's value as a cash out loan. But Ginnie Mae, who controls the pools, is changing their rules, and those are going away. So
They
only up
should.
to
That's
90%.
that's a little dangerous,
If you want to go 100% cash on your home, do it right now if you're a veteran, because it's going away very soon.
How soon is
What's
it
it going to go? Yeah, and
90. It's going to go to 90, which
that's still a
it's
lot.
still a lot. The FHA just went from 85 to 80. They've been 85 forever. Conventional loans actually went up to 85. So VA was better than everybody else, but you're going to lose that last 10% on any cash out VA loan.
And what was it? FHA's 3% down?
3.5% down.
3.5%.
They'll do 3.5% down. Conventional, we can actually do 3% down now, as long as you're a conforming loan.
But you still have to do your ratios and ability to repay. So it's not just a down payment of, hey, good news, 3%.
Right.
I mean, if you can't afford that monthly payment,
Yep.
then
Isn't 43% like
Is that what that
the
is?
cap?
So that is the cap, but there is an exclusion for what are called qualified mortgages, and those are mortgages that meet Fannie Mae, Freddie Mac, or the FHA or the VA's requirements, which is going to be a majority of the loans out there. Now that is set to sunset in about 1.5 years or so, and it will potentially go down to 43 for everybody. But right now, you can go up to about 50 on conventional, 55 on FHA, and even higher on VA. But that
well,
will
in
go away.
theory, then that'll help Pacific Private Money.
Well, yeah, if they go down to 43 across the board, then that's going to eliminate a number of people from being able to get conventional loans. So
Yeah, people have asked, okay, well, what percentage is in that 43 to 50
55.
range, or 55? And it is actually a large percentage, especially first-time home buyers.
Wow.
And oftentimes people have income that we're not able to use in that calculation. So somebody might have a side job, they've only had it 1 year, we can't use that income, or something else, or they have a family member who's contributing, but maybe they can't be on a loan due to credit. So, it may not be an accurate picture of the total income on debts of the home, but for mortgages, if we do lose that exclusion, it is going to push more people into the private money, whether it's through somebody like yourself or into the jumbo non-QM space, which is really expanding right now.
I have a question. We're seeing more and more people. You just mentioned side jobs or secondary income. I mean, there's a lot of people who are in the quote gig economy. Are any of those getting home loans, or it seems like by its nature,
sorry, I have to
gig economy is
interrupt.
like
What kind of economy?
gig economy, like side hustle, like driving for Uber and also
Uber and Lyft.
Yeah, and Lyft and doing a lot of
TaskRabbit.
a lot of jobs that
Oh
are
yeah, I've heard of that.
where you're kind of independent. You can sign up for them, you can work with them, and you can choose a lot of different types of jobs. But they're not necessarily. I mean, Uber or Lyft is definitely full time. There's a lot of smaller jobs that people cobble together and make a living out of.
Yeah, I mean, generally those jobs are the hours you want to work, and as long as the income is declared on the tax returns, we treat it like any other self-employment. And we've certainly done loans for people who drive Uber and Lyft. Generally, I find the hours they put in doesn't reflect as much income as you'd hope for them. But we do loans for people, and oftentimes it is a second job or a side job.
And doesn't Uber give a 1099?
They do.
Okay. I mean, so you can't really do too much cheating on your tax return.
I mean, there's that component. I'm just wondering if you can do enough side jobs like that to actually make a living.
Well, there's 24 hours in a day.
I mean, you can, and it all depends on what kind of house you're buying and how much. Are you buying in Millionaire Row in San Francisco? Probably not.
Probably not.
But
well, that's why I asked Mom. I go, what does 24/7 mean to you? See, but he has to do the radio show, so he has to take some time off to do this.
Yeah. Then I got to go back to my Uber.
Your Uber fun job.
Yes,
that's right. So, Dane, what are the biggest misconceptions on mortgages these days?
Well, the biggest one, and this is huge right now, is that the Federal Reserve rate correlates to mortgage rates. And right now with the most recent drop, there's tons of advertisements out there. There's tons of people calling me saying, "Hey, the Fed dropped their rates. Are mortgage rates down 0.25% too?" And mortgage rates are down, and in fact, they're fantastic right now. But it almost has nothing to do with the Federal Reserve drop.
And Mark's mentioned that on the show before.
Yeah, a number of times.
It's kind of a pet peeve of mine, because I have customers now who are like, "Well, I want to wait till September, see what the Fed does." And you know what? The mortgage-backed security market, just like the stock market, already knows what the Fed's going to do to a reasonable doubt, and it's already baked into the interest rates. It's why we're seeing the best rates in the last 3 years. Because of what the overall economy is looking like, and the Fed is really reacting to that, not necessarily setting it.
Interesting.
Good point.
Yeah, rates are pretty incredible right now.
Absolutely.
I hear a lot of our conventional lenders that are just buried with refis and some new purchase activity. So
we're seeing 3-year lows right now, and 3 years ago was very good, not much off the very best interest rates. So 30-year fix for your best qualified people are approaching the mid 3% again, which, I mean, that's, there's no such thing as free money, but that's getting pretty close.
What are the points, fees?
That's no points.
No points?
Yeah. So
what do you get? How do you, obviously you guys got to make money. How do you make your money?
Yeah. So a bank like mine, the business model is to create loans that then are either serviced or sold. So the servicing, obviously, we're going to make money on the interest that's collected, and the selling of a loan, you're going to sell the loan for a little bit more than you lent out yourself.
I mean, if you're charging the borrower 3.5%, how much can you borrow the money at yourself?
Yeah, well, I mean, that's the thing, is it's not necessarily what we would borrow the money for, because we're going to borrow on what are called warehouse lines, which is basically just a big line of credit. It's more that if I gave you a loan for $500,000, I could turn around and sell it to somebody else for $505,000 because they're going to collect the interest on your loan over a certain number of years.
But there's no prepayment penalty, though. So.
No, and that's a big deal right now, and why mortgage rates are not as low as you would imagine looking at the treasuries, because prepayment speeds, the speed that people are paying off their mortgages, is really scaring people out there who make money collecting interest on mortgages. I mean, can you imagine?
Okay.
Can you imagine rates are 3.5, and all of a sudden you bought all these loans and you paid a premium, and oh my God, the money's just coming in, and you don't want that money.
I just can't see who would pay a premium for a loan that's paying 3.5%.
Yeah.
But everyone looks at what's going on in the bank. You can put your money at 1% or even 2%.
I mean, you look at a 30-year Treasury bond; it's less than 2% now. So you're gonna go give you 3.5.
You know what? We had Gary Schlossberg last week, Wells Fargo's chief economist, and we were talking about negative yields overseas.
Yeah.
Can you imagine having to pay a bank to keep your money? Yeah, I'd put it under a mattress.
How about a negative mortage? They're talking about those in Europe now, where they will pay you to take out a mortgage, and it's actually happened.
That. Yeah.
Really?
How many houses can I buy?
Yeah.
But we're done. Okay. Second trivia question is, what constellation is represented by scales? So you have to know your signs of the zodiac for this one. This is, I guess, a science question because we're talking constellations here. Call 888-912-1190. Be the first caller with the correct answer. You're going to win that tanning certificate. What constellation is represented by scales? You understand? Okay. All right. Stay with us. You're listening to the Best of Invest. Hey, by the way, before we cut out, how do people get a hold of you, Dane?
Give me a call. It's best. 415-870-2752. Or you can always drop me an email at DMOLER. That's dmoller at primeres.com. PRIMERES as in Sam.com.
Very good. We're going to be right back. Good. I want to make sure I didn't forget that.
Thank you.
What's that?
Libra with
Yes.
Very good. I was gonna say Aries. I don't know any better.
Aries the Ram.
Yeah.
I know because my mom.
I don't read my horoscope. Just kidding.
This is science.
Yeah,
Science. Yeah, this is science. This is
Isn't
horoscope.
astrology science?
Sure.
Sure.
As Trump would say, fake news, fake science. Right? Here.
So you're selling loans at a premium. So it's 500. Like if you do one at 500,000, is it common to sell it at 505? Like the buyer.
Yeah, I mean, my job is not on that side of the business,
right.
but yeah, absolutely, absolutely.
That's crazy.
Or more, actually, quite a bit more. Actually, now that I think about it, if I think about what I take, like what I cut in there, and then also what my company cuts in there,
right?
Like, you're talking like maybe 2, 3, 4, 4.5.
Yeah,
you're talking like 6, 7. Like,
and so are these homeowners paying down? Like, how much faster are they paying down their loans or paying them off compared to what they were?
Well, there's 30-year paper.
Yeah,
right?
I mean,
So
most people are
principal.
restarting, and the best candidate for a refi is someone who bought a house in the last 3 years or refi in the last 3 years. Because then that start over is really not that big a deal, and they have a higher interest rate. And what I generally will do is I'll say, look, you have 28 years, 4 months left. Let me give you the payment to stay on track.
Yeah.
So that way, instead of your bill's gonna be $300 less, but if you send in 150 more than that, save 150, you're gonna be exactly on schedule.
I know that's the thing is people go, oh, but look at all the money I'm paying in principal each time, and you go, well, then just pay the same amount.
Or I'll tell people, look, just keep paying the same thing. Now it's $2,500. It used to be $3,000, and I'll tell you how many years you're gonna save.
Yeah.
And you just save 2.5 years at $3,000 a month. We're talking, quick math, $30,000 that you just saved paying off your home. So do it that way.
Yeah. I know that's why I try to understand people how they, it's really based on the interest rate. It's really what it comes down to.
Absolutely.
As long as you've got the cash flow to pay a certain amount, that's all it really comes down
It's
to.
interest rate savings, and then the cost to get there, and your time horizon on the loan. It's 3 parts, and that's it.
Exactly. Okay. Let's see here. Why don't we get into see if they're creative financing, then we'll shoot over to Don.
Sure.
Okay.
Segment 3.
Here we go. Ready, go. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Nam Phan and our special guest, Dane Bowler. Second trivia question: what constellation is represented by scales?
Virgo?
No,
No.
you already guessed it before at the
know,
break.
Libra.
Libra. Yeah, my
There
dad
we
was
go.
Libra. That's why I remember that one. Okay, Dane.
Thanks for the answer, Dane.
Yeah, that's right. Creative finance. You have a little note here. Creative financing is back in the mortgage world to some degree. What sort of options are available? What do you see in the market?
Well, we don't want to steal anybody from Pacific Private Money, but the options are coming out here. And you mentioned non-QM earlier. It's a technical term. The government has decided what's a qualified mortgage, which is something that gets extra special protection as a lender. But we have new loans in the non-QM space. And these allow people in general to qualify with alternative income. The biggest things these days is bank statement qualification. So someone who's self-employed, they really don't do the tax returns. You know, they don't put the income on there, or they have lots of write-offs. They write off their cell phone and their car and everything in their personal.
They don't want to pay that much in
They
taxes.
don't want to pay taxes. We can look at 12 months or 24 months of their personal bank statements or business bank statements, add up those deposits, take a percentage for expenses, and finance your house doing that.
Wow.
There isn't the traditional, there used to be in the old days sphere, but you can actually, putting money in the bank, you can qualify.
But here's the funny thing is, you know, and most CPAs will tell their clients, if you don't report income, it's tax fraud.
Yeah.
You know, writing off extra expenses potentially, well, maybe it's deductible, maybe it's not. Well, if you have those deposits income, then you're really opening up yourself for potential IRS fraud.
Yeah, I'm not pretending to give any sort of tax
Oh,
advice.
I know you're not. I'm
Yeah.
saying, because I know you're just saying basically, look, the facts are, we can use it.
Yeah, and you know, a lot of times these programs are structured, don't want to find and explain your tax returns. Maybe they have good numbers on there, but you want to do it a different way. So,
Sure.
Do you always ask for tax returns?
you know, if a borrower comes to us and says, I've heard of your bank statement qualification program, we're going to let them do.
And what are the kind of rates that you're?
So, you know, not terrible, but
Right.
not certainly, you know, threes that we were talking about before.
Gotcha.
Another great program, newer one, is an investor cash flow program. So somebody owns a rental property. As long as the rent exceeds the principal, interest, tax, and insurance of the property, they can get a loan. In that case, we don't look at tax returns. We don't look at bank statements. We don't look at the overall debt to income. It's purely based on that property. So that would be investment properties only, but you can get a loan as long as it cash flows.
And how long does the rent have to be shown? I mean, if you
Current
2 months,
Current
or
rent,
just current rent?
current
Wow.
rent, and the appraiser is going to go out there and give us an opinion of market rent. So we're going to use the lower of market rent or the actual
Okay, so
rent on the
even
property.
a month-to-month rental's fine.
Absolutely.
Okay.
And how long are these loans for?
These are 30-year fixed
Yeah.
mortgages. You can also do ARMs. Oftentimes people are, 5-year, 7-year ARMs, but
But can they do legs?
no.
No, just arms.
No
Okay.
legs.
We'll start a new program,
Yeah.
lending program. 7-1 leg.
Yeah.
We'll just have to come up with whatever
Lending
that.
extra good.
Oh yeah,
There you go.
Hey,
Or
better go copyright that.
Guido comes and breaks your legs.
Yes.
Yeah.
Yeah, just like the old ninja loans.
That's
income,
right.
No asset
Exactly.
or job.
All right. Tell you what, let's stay with us. We're going to move over to Nam here. Nam, we actually got an email for you. It says, why is there a minimum hold time in your fund? So you have to backtrack because this person has
Sure.
obviously heard us before.
Yeah, so they're referring to the Pacific Private Money Fund, which is our mortgage debt fund. It's made up currently of about 50 million in loans, about 80 loans in the portfolio for private lenders. And the question it relates to when you're an investor in the fund, there's 3 requirements. One is how long do I have to stay in, or what's the minimum hold period, and it's 12 months. The reason, and by regulation, there's a minimum. It used to be for us 24 months, but by regulation, you can't have a hold period below 12 months. So we don't want people treating it like an ATM.
Yeah.
But after a year, you can redeem your investment and just let us know. The redemptions usually are honored on a first come. Well, they're honored on a first come first served basis. We just have to have the liquidity. Typically, it's about 2 to 6 weeks, or 2 to 4 weeks, to redeem your investment.
So it's more a matter of regulation as to why there's a 1-year hold rather than you guys just putting that on there like to just invest.
Right, and we don't want people who are going to invest only for 3 months and then pull their investment out. And also, The interesting thing is we have very few people who redeem after 12 months. I mean, they're getting a return of 7.5 to 7.75% return on an annualized basis. So they're really, you're not getting very many returns like that in other investment types. So,
okay. Well, we have a little time, so give us a deal of the week, because people, if they're listening for the first time, I know people have heard us talk about this before. No, but first-time listeners are going to say, "Oh wait, did I just hear him say they could pay 7.5%?"
Yeah, I was just thinking that too.
Yeah, how are you paying 7.5%?
Wait, I can borrow at 3.5 against my house and get 7.5.
Yeah. Well, I don't think you encourage people to borrow on their house.
no, we would never say that.
No.
So why do people come to us? There's a lot of different reasons, and this particular deal of the week, and I think you have one too, right?
I do. Yes.
Okay. So on this one, we do loans which we call cross-collateralization, where somebody wants to borrow money on to purchase a home, but their income or their equity is tied up in another residence. So we do what's called cross-collateralization. We're taking the equity that they have in the home that they own, using that towards collateral for the purchase.
Okay.
So that's a common one we do, where many banks don't do that. The other part of it, though, is that actually they already have a first and second loan on the departing residence,
okay,
and we're actually going to do a third.
Holy smokes, a third mortgage.
So you'd say, why would you do a third? And a lot of people go, geez, a third, aren't you really at risk? But the combined loan to value on these 3 loans is less than 50%.
Wow, okay.
So it's one where, for us, it's kind of a no-brainer. Plus, they're planning to sell it.
Yeah.
So we're going to exit the loan within probably like 6 months. So.
And a lot of these cross-collateralization programs, they're going to want to replace the first and second mortgage, and you potentially have a higher interest rate. So it sounds like you can come in as a third, which is an amazing option for anybody out there looking to buy a home before selling their last home.
Exactly. And then with such a low loan to value, your company's not really that
yeah, we don't have a lot of exposure.
Yeah.
So we're going to do that loan. It should be closing in the next 2 weeks.
Oh, that's great.
Yeah. Good stuff. How do people get a hold of you, my friend?
They can call us at 415-883-2150 or go to www.pacificprivatemoney.com.
All right. And when we come back, it's not a deal of the week, but it's an interesting story of the week. And it has to do with someone, the question comes up all the time. Well, gosh, what happens if someone doesn't pay? Well, you file a notice of default. Well, what happens after that? What else can happen? They can file bankruptcy. Well, oh my gosh, that's terrible. Well, yeah, for temporarily. So, audience, stay tuned. You're going to hear you're going to hear the story on that one. Okay. Our third science question is: how many kilograms are there in a metric ton? All right. Call 888-912-1190 to answer this question and be the first caller with the correct answer. You're going to win that $100 tanning certificate that's worth $100 worth of services. How many kilograms are there in a metric ton? All right, stay with us. You're listening to The Best of Investing. We're going to come right back. You're not going to want to miss this story.
Excellent. Man, I need to get some water.
Oh, yeah.
Sorry.
Get the meat sweats.
How many grams a pound? Kilograms a pound?
I don't know.
Metric tons to 2,000 pounds. Well, it's a metric ton. It's got to be different than
You can't be looking it up on your phone. That's no fair.
100,000.
For if I can get this on the TV program, because we're on CMCM local TV.
Do you mind if I turn the fan a little bit?
No, it's I'd probably. Well, you can answer. We'll
All right.
see.
Oh, sorry. Not good enough.
I'm just looking at kilograms to pounds. That's it. I'm not going to look.
Don't do it.
Oh, wait,
Don't do it.
metric ton. All right.
Okay. Maybe I stumped the experts. It's experts.
Yeah, I'm not a metric guy.
I know, either my
900. That's my guess.
Good.
it's like a baker's dozen. How many are in a baker's dozen?
13.
13.
Yeah.
All right.
Okay.
I guess that's why, because in case they break an egg.
Yeah.
I don't know why it's baker's dozen is different. They're clumsy. Okay, ready? Here we go. Welcome back to The Best of Investing. Last time for today. Well, actually, not the last time. The next segment will be the last time. Last time for today. I'm Edward Brown, your host, along with Nam Fawn of Pacific Private Money and Dane Moeller of Primary residential mortgage.
Here I am.
I got that. All right, third trivia question. How many kilograms are there in a metric ton?
I'm going 900.
300.
1,000
Oh,
kilograms. It was a non-trick question, I guess. All right, so I got a story owed a week. So there was a loan that I did a few years ago, and the guy was paying like clockwork. And then in June of 2018, he stopped making payments. Well, you don't foreclose right away. You give him some time. I gave him a month. And then he gave an excuse of, well, I'm working on something. I promised to pay. I'm really trying hard. And the guy was actually a fairly honest guy. Didn't pay. Went another month. Didn't pay. Finally, I said, hey, guy, I'm going to have to file a notice of default. Oh, yeah, I know. So I filed notice of default. So now, technically, it's 3 months and 21 days until I can go to foreclosure. So we're stretching this thing out now pretty much close to 6 months. All the while, I'm earning accrued interest plus late fees. No default interest because it's primary residence, but it was very well secured in my opinion. And then, sure enough, literally 3 days before foreclosure notice, for the actual sale, he files bankruptcy.
of course.
Of course.
Mhm.
Well, he's got to protect himself. So okay, no hard feelings, but you got to do what you got to do. So he stretches this thing out. And he's got some all crazy plan he wants to show the trustee, who basically looks at it and says, yeah, no, that's not going to work. Why aren't you selling the property? Oh, I am. I'm hiring a broker and da 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 da. Well, he stretches this thing out and stretches it out, and now it's been 14 months since I got a payment. Okay, it's accruing all of this interest plus the late fees. So now we're down to the wire again, where the judge / trustee is basically saying, okay, that's it. You come to the end of your rope, and we're going to go to sale. So I actually get a call from him. I didn't do any communication with him, but finally he called me and he said, I got a plan. And I go, what's your plan? He says, I'm going to borrow money from a friend, and I'm going to make up all of the past late fees and interest and prepay 2 months worth in the future. Now my loan is technically due. So he said, you can even keep your foreclosure notice active. So it's not like I have to start all over again because I've accepted payments.
Mm-hmm.
If it was a loan that didn't come due for another few years, basically I'd have to start all over again.
Sure.
I said, someone's going to lend you that kind of money? And he goes, yeah, he's a friend, blah, blah, blah. Okay. So he says, just all I want is 2 months. And what I'm going to do is I'm going to transfer the property to my mother, and she's old. She's an old lady, and she's going to qualify for a reverse mortgage lump sum, which will be enough to pay you. And oh, by the way, I have IRS liens on the property, okay, which are behind me. Okay. And at first I was thinking, I don't know about this. And then I started realizing, I go, you know what? Actually, if I get money now from the guy, I'm less at risk.
Mm-hmm.
And if his plan doesn't work in 2 months, boom, I'll be right there back at the foreclosure.
Right. Yeah. And you will have caught up.
And I'll have caught up, exactly. And,
yeah.
And the thing is, I can't stop him from filing another bankruptcy, different chapter, let's say.
Mm-hmm.
But the thing is, I looked at it and I said, you know what, he's actually got a pretty darn good plan. I think it's a great plan for the reverse mortgage, and it's a great plan that he's coming up with all this money.
Sure.
And so I'm thinking, well, okay, listen, here, I'm going to go guns a-blazing until you actually write that check.
Right.
And it's got to be a wire, right? Well, he didn't do a wire. However, because he banked at the same bank, he just transferred the money.
Wow.
And the bank cleared it. And I go, wait a minute, this actually worked, right? So the moral of the story, basically, for me to tell the audience is, although I was inconvenienced for 14 months, right, I earned over 9% interest on this loan, plus an extra 5% of penalty on the payment. So whatever that is, I guess that works out to be like 9.25% or whatever it is. And I still have the right to foreclose at some point if he doesn't pay me off in a couple of months. And there's lots and lots of equity where if I actually do have to foreclose, I could potentially make a boatload of money.
Nice.
So it's not risk-free. And had I guess my advice to be to somebody who would be looking at something like this. Excuse me.
While you're getting your breath back, during this time, it's two of my
That's funny.
birthdays have passed. And
Yeah.
Christmas, so there's a backlog of gifts that
Boy,
I'm going to be hitting you up for.
boy, that hurt. The moral of the story here is if that money was going to be, I'm not crying, audience, but I swallowed something accidentally.
Touching.
Is that if this was money that I absolutely had to live on?
Yeah.
If he didn't make the payment, and I got 14 months of no payment, that would be in a world of hurt.
Right.
But this is the reason why you diversify,
Mhm.
which is also why people go into the fund.
Exactly. People. We have two kinds of investors. Those who are trusted investors, like Edward just described with his scenario, and then we have those who are invested in the fund. And increasingly, many of our trusted investors are saying, you know what, I'm tired of chasing individual loans or having to manage when a borrower goes into default. So we're seeing many of our investors, they see the returns of the fund and they're lower than what they're earning on a trusted investor because they're not paying us to manage, right? But they're managing it themselves. But saying, you know what, I'd rather get sleep well at night, not worrying about my portfolio, my few loans that I make to a couple of investors or borrowers, excuse me. I don't want to lose sleep at night trying to, worrying about whether or not they're going to pay. So they invest in our fund, which is diversified, and we have people in the fund too, borrowers who default and whose properties, unfortunately, in some cases, we have to take back and sell. But that's our job to manage, and we want our investors to know that we're making a lending decision, we're doing the workouts with the borrowers, and in the worst case scenarios, if we have to take the property back and deal with somebody who would file bankruptcy, that's what we do. So.
Now, if you take a property back or you foreclose in this scenario, now you hear the courthouse steps commonly used? Is that the process?
That actually is. It's like the old Wild West.
Yeah.
And in this case, it's kind of interesting because the IRS has a lien that is recorded, but it's behind me.
Yeah.
So if I were to foreclose, I would wipe out the IRS temporarily, but they have 120 days to redeem. So I can't do anything with the property for 120 days while the IRS ponders whether or not they want to pay me off, or
so they can buy you out.
they can
from
basically
second
buy me
position.
from their second position to correct, and they'll pay me 6% interest while I'm waiting.
Really?
For that 4-month period, because it'd be kind of unfair to say, yeah, Mr. Brown, we're going to think about this for 4 months, and I get nothing, but I don't get the note rate. I only get 6% interest. Sometimes I'll just go ahead and just say, no, it's not worth it. We're going to just wipe our lien off. In other cases, they'll say, yeah, no, we know this property pretty well. We're going to pay you off, Mr. Brown, or you can pay us and keep the property. That's the other thing they can do. All right, let's see here. We have just 15 seconds. Again, Nom, give out your information if people are interested in investing with you.
Yeah, so our phone number at Pacific Private Money is 415-883-2150. Or you can go to our website, which is www.pacificprivatemoney.com.
All right. When we come back, we're going to have some closing comments here on the best of investing. Don't touch that dot. We'll be right back. And we'll give you a chance to say your information again, too.
Great.
I have a small epiglottis, and so sometimes just don't, just swallow. I mean, I wasn't even eating anything.
What's the minimum investment in your fund?
It's 50,000.
50,000.
Mm-hmm. Minimum investments 50,000. Minimum hold is 1 year, and it's because of the type of fund, which is Reg D fund. It's just it requires investors to be accredited. So you have to be accredited, and for us, accredited investor is somebody who has $1 million net worth, but their primary residence can't be used as part of that calculation.
Oh,
I think that's the
interesting.
definition of
Yeah, it's a
accredited
bummer
anyway.
because so many people.
Is that I've seen different definitions.
Of accredited?
Yeah, I mean that sounds like I've heard the $1 million one, but I don't know. Maybe I just missed the part that the primary residence.
Yeah,
equity is not.
that's a technical term. Yeah, it's not just your fund. It's all like being an accredited investor. That's what it means.
Can't earn money until you have money. That's it.
Well,
You can't lose money till you
the
have
thing
money.
that kind of stinks about that though is we have investors who pull out, maybe have 500,000 in other types of investments, and then they pulled out 500,000 equity, the equity out of the home to buy a rental.
Sure.
That person qualifies because they meet $1 million net worth.
Yeah.
Then somebody else who kept that $500,000 in their home and has no investment properties.
Yeah, I mean, you could just pull that money out and put it in the bank,
Right.
You know, out of your
Yeah.
primary residence to
Yeah.
meet the requirement. It is interesting because it is accessible net worth in the same way that it would be in another real estate investment.
Right.
So,
Right. And so many people in the Bay Area, you know, their net worth is tied up in their home.
Yeah.
Or a good portion.
well, yeah, if you've owned your home for a while, you have a good portion of your net worth in your home.
It's a big number. People who you know, have a significant amount of equity.
Well, that's got to be frustrating on your side, having people excited to invest. They love the ideas. They love what you're doing. Rate of return sounds good, and then you're like, yeah, you're at 600,000 net worth.
Yeah.
What do you mean?
Yeah.
Well, your house doesn't count. I got $1 million sitting there.
Yeah.
You know.
That's exactly. Probably 1 in 10 people we talk to.
Yeah.
They don't read that because of their home. So that's unfortunate.
Interesting.
Yeah, it's
I don't know if I'd meet it. I'll have to add up. I haven't done a net worth check in a while. I'd have to add it.
Well, and that's the thing is you have to have like a third party independent. Check it out.
Yeah, actually today somebody sent me their brokerage statement with Fidelity.
Yeah.
And they're qualified. But as of 2017, then we require third party verification. And you can, there's a website you can go through, called verifiedinvestor.com, or you can go to your CPA or somebody who's professional and can sign off on your behalf.
Yeah, the CPA is always in the mortgage industry. The CPA, like they'll put on a letter and sign their name. It's like gold. You know?
Yeah.
And it's often like, why does it matter if the CPA says that? That's
Well, because
you
we're all
gotta say somebody's telling the
we're
truth.
all
You
we're
have
all
to go.
trustworthy.
Yeah.
That's well, I'm not a CPA, but I used to sign off on financial statements and stuff for clients.
I don't know, maybe this isn't a question for when we're recording again, but what's
I just looked at a chart this week. I want to say it's like 1.6%.
okay?
That's like
can we ask that?
significantly, that's significantly behind, which is like over 120 days or in active notice of default, something like that. I know I got that on a email very recently.
Could we ask that? Is that something we can talk about on the
I'm sorry.
last segment?
About
Default rates? I
Yeah,
don't know if
sure.
it's interesting enough, but it seems.
Yeah, I mean it's economic news, really.
Yeah.
Just can't swallow. Can't talk.
Okay.
Can't swallow. Can't do anything. Okay. Ready?
Yes.
Welcome back to the Best of Investing. Last time for today. Really, this is the last time for today. I'm Edward Brown, your host, along with Nom Pond and Dane Bowler. We didn't have a trivia question, but you want to ask Dane about default rates.
Yeah. You know, on the show, we often talk about, obviously, we're Pacific Private Money. People ask, you know, what's the default rate of people who borrow on private money? And we've had a number of mortgage professionals on, but I don't think we've asked that question in a while. So, Dane, in terms of in the conventional world, what's the default rate that you see across the industry? And I don't know if you know the stats compared to when, you know, the recession, the Great Recession. It would be interesting to know what it was back then versus what it is today.
Yeah, I do actually know some of those numbers. You know, these days people have a lot of options with rising equity to sell their home if they're facing default, which back in 2007, 8, 9 was not necessarily the option. People were going to short sales or foreclosures because they were upside down. And in that time period on conventional loans, you're looking around 7% default rate at the highest, which these are conventional loans, you know, people who didn't, you know, not VA or not private money or FHA, this is conventional. And that's down now under 1% or just about.
Oh, okay.
So
Just about 1%.
Yeah, just about 1%.
Well, everyone's employed now. That's
Well, yeah, I mean, that's part of it, but I think,
Yeah.
you know, even for people who, you know, have life circumstances where they can no longer pay the mortgage, they can sell their home generally and get some equity out and move on.
Yeah, that and in combination with, you know, the tighter lending environment for the last several years, the people who have mortgages now or were able to get them are people who could afford them.
And also the interest rates are lower.
Right.
You know,
Sure.
you're going to default more on a 10% interest rate. than
Well, I mean, it depends on your debt to income requirements. 10% or 1%. If you're lending somebody at the maximum, that's the maximum they can afford. You know?
Mhm.
So it doesn't
True.
matter what the rate is; it matters what the payment is as opposed to their income. And to Nom's point, it has gotten tighter, and it was much tighter right after that time period for good reason.
I forgot to tell you, we never contradict the host on the
Oh,
show.
I'm
I'm just
sorry.
kidding.
I mean, as long as
No,
you're
well,
right 100% of the
That's
time.
right, exactly. No, but I'm thinking that if it's 10%, you're going to have generally a higher payment in general, and people, you know, if they see their interest rates are 1 or 2%, you're going to fight a lot harder because you don't want to lose that interest rate.
Yeah,
if
I think
possible.
people fight harder for the equity. You know, if they
True,
don't, if they don't
absolutely,
have
true,
equity in their
absolutely.
home, you know, you don't go to the grocery store and spend your interest rate. You know, you
Well,
spend
no,
the
that's
money
true.
left
No,
over.
that is a good point. I mean, well, that's if you're upside down.
Yeah.
Yeah.
And I think you are right, though. I mean, you wouldn't want to.
Thank you.
You wouldn't want to sell if you had a 1% interest and have to go buy somewhere else at 5.
That's right.
So
There's my point. So you
yeah.
just made my point for me.
Yeah.
Thank you very much. We're going to have you on back again. You're excellent. Excellent.
For the listeners, though, there was almost blows. It almost
Well, it makes for good radio, though. And,
makes for even better television, though.
that's true.
Yeah.
That's right. So we are recording this for CMCM TV. For those who don't know, that's our local.
They'll be
television
disappointed,
channel.
though. We never got close to getting the blows.
Yeah.
No, that's why I have a big desk. We can't reach each other. No, Dane's a good guy. Dane, again, how do people get a hold of you?
Best way to get a hold of me is to email me at dmoler, dmoler@primeres.com, or you go to primary residential SF. So spelled out, primary residential, and then the letters sf.com. That's our website. Phone number here at the local San Rafael office is 415-870-2752.
I like the prime res. You know, it's a nice little easy thing to remember.
Res.
Yeah.
And Nom, how do people
Really
get a
nice.
hold of you if they're interested in earning? How much? What interest rate are you guys paying on the fund right now?
About 7.5.
7.5%, and you pay that monthly.
Yes.
I mean, not 7.5% per month. That'd be 90%, but 7.5%.
Although, you know, I'll tell you, I think somebody got their first distribution, and they're like, I thought this was paying 7%. I'm like, it's annualized or 7.5%, and they spelled that out in the email and didn't get a reply back. So,
No,
yeah.
or maybe they were in for 4 days or something.
Yeah.
Right, because
That
it
could be too.
is partial. And they go, well, I didn't get. Yeah, but you weren't in for a whole month. All right, okay, guys, we're gonna cut out for today. We got our thoughts for the day here. Ever realize that the object of golf is to play the least amount of golf?
Yeah.
Right, trying to get the lowest score. And you can't leave footprints in the sand of time if you're sitting on your tushy. So get off your. I won't fill in the blank there. All right, tune in next week to the Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. And that's a wrap.
All right.
That's a show. Yeah, these headphones get all
You get hot.
hot.
I don't know how
It's usually not quite this hot, but
You
like
mean
I
it's
said,
not
the air
normally
conditioning broke.
103 outside?
I know.
Yeah.
Jeez.
We should have recorded at your office, but we didn't know it was going to be like this.
No, as long as you get a little bit of breeze blowing, I'm okay.
Yeah, that's why I had to have the 2 fans here.
At our conference room, the AC
Oh, yeah.
just only got fixed like a week ago. So
Or installed.
yeah, it's weird because it seemed like the heater was on, would blow on in there. So it was always
That's just the ladies
Where's
are
that
always
office?
cold.
in Nevada.
Ah, so even hotter up there.
Yeah. Do you have a card?
I do.
Actually, it was hotter in Marinwood than it was in Nevada.
Really?
It went from 99 to 101.
Thank you. I actually didn't have the cards downstairs.
We have-
shoot,
we have
shoot
my
me an
card.
email.
I will.
Yeah.
I will.
Yeah, emails are better for me anyway because the cards will go into my drawer and then I'll,
Yeah.
and then I'll try to remember and I'll try to find it. But emails I kind of keep organized and I'll
Absolutely,
have
yeah.
contacts.
Well, definitely give us a call with, deals that you guys, again, can't
Yeah,
find
and
them.
I did a cross collateral loan recently, but we had to replace the existing mortgage, and the guy had a great loan, and he was so he's like, but I got to go from 4 to 6.5 or 7 or something, and I'm like, yeah, you just got to do it. You're gonna sell your house anyway. Who cares?
Right.
If
But
it's short term, yeah.
yeah, I mean, but it would have been a much easier thing, and quite frankly, I don't want to do cross collateral. It was a pain in the ass.
Yeah.
I had to do 4 appraisals, 2 on each property. And
Wow.
Oh, wow.
this is the loan you asked about brokering. This loan we brokered to a
Yeah.
bank called Axos, which used to be
Mhm.
Bank of the Internet out
Yeah.
of
Oh, yeah.
Walnut Creek, I think.
Yep. Yep.
And they got it done, but man, pain in the ass.
Yeah.
I mean, I don't want to do that. That's not. We talk about conveyor belt financing. I want to do what I do, and I want to do it really well. And the outside of that box, this was beginning of the year, coming off a pretty tough winter, and I was willing to take any loan that someone gave me.
Right.
Right now,
Well, generally speaking, how many loans you working on at a time?
right now we got 62 in our pipeline.
Wow.
Need application is in.
Yeah.
Wants to be funded 30 to 45 days from now.
That's amazing. How do you generally get your business?
All repeat and referral.
Isn't that amazing?
100%.
Wow.
I've been doing this 17 years, and I just got a backlog. I've done 2,500 loans, and and some of those are the same people, but and all those people pop out of the woodwork.
But you're the guy. They just go.
They
hey,
pop out of the woodwork, and I
guy.
haven't talked to them in 5 years, and I want to buy another house. So you're my guy. I'm
Yeah.
I love being your guy. I don't know how I even know you, but I'm your guy.
That's
Back, I wasn't always repeating referral. Back in the first company I worked for was a telemarketing-based subprime company. And that was all telemarketing leads. And then when we started, I left there and started primary residential in 2008. So I've been in this company 11 years.
Okay.
And in 2008, the market was obviously just in turmoil.
Yeah.
And we started up, and it was right when rates went from 6.25 to 5.99. I'm like, I can sell the fives. Absolutely, I can sell the fives. And we did a lot of internet leads. And at that time, no one was spending money on marketing because it was just it was just everyone was just trying to survive.
Right.
And internet leads were we were crushing it. I mean, we were spending $15 a lead and funding 1 in 15 or 1 in 20.
Wow, that's
so
awesome.
your cost per funding is at $150, $200.
Right.
That is, if you're under 500, you're just printing money at that point.
Mhm.
So I established a lot of relationships
And
on
we
internet
are
leads,
out.
and now I don't even know. I get calls from people all over the state and in Oregon, and I know them, but I have no idea what person I did a loan for who referred 3 dams down the road.
Yeah.
Why am I doing this?